All right. Good morning, everyone. Welcome to Daily Rates Live, the mortgage calculator. We are a lender and broker in over 25 states with over 300 loan officers. So we'd be happy to help you out with any of the quotes you see today. Please go on our website and someone can give you a hand. Today we'll check out all of our live rates for our standard programs, and then we'll go into a deep dive on a very common question from many borrowers out there. What's the difference between a 15-year and a 30 loan? Can we get the rates down? How do those compare? And I have some examples for a actual specific listing that we can pull up side by side and compare and see how that makes a difference for a standard scenario. So let me go ahead and get started for today. And go ahead and switch my screen here. Now, before we get started, we usually want to check out the 10-year Treasury. That's typically one of the best indicators for rates overall, especially when we compare QM, non-QM, USDA. We're comparing everything as a whole. Rates will generally track with the 10-year Treasury here. And you see we had some movement over the last 5 days, but I always want to put in perspective here that we are still at 1-year lows, which is amazing. So great opportunity for everybody out there shopping. Now let's check out some actual live rates here. So when we switch into our live rates page, we always have this updated live in real time for our best options. It's going to be, for a standard scenario, a single family home, 500,000 purchase, 300,000 loan amount. That corresponds to 60% loan to value, 764, 40% debt to income. That way we can compare all the different programs we offer. And you'll see here today I have a specific scenario where we can take it to the maximums. Lowest rate option here today for a conventional loan. What you think of when you think of a standard mortgage, Fannie Mae, Freddie Mac, coming in today, 5.875 rate, finally 6.111, and we'll typically compare that for our standard borrower to an FHA option. FHA allows more leniency on credit issues and a higher overall to income ratio, but does have upfront and yearly mortgage insurance that is required. Rates today come in at 5.125, but with those additional costs, final APR comes in at 6.02. Which is beating conventional today, which is a little bit unusual. So that's amazing. We love to see when things are a little bit different than expected. Now, if our borrowers qualify for VA, for our eligible vets, active service members, and surviving spouses, we can offer our VA option low as 5.25 rate. Final APR is 5.5 today with all of the fees included there. So when you compare that to FHA, much less fees there for our vets. That's why even though the rate is a little bit lower for FHA, the final APR is what you want to use to compare, and it's a lot lower overall for our veteran. And our final standard option, quote unquote here, USDA, for our properties in USDA eligible areas. Those are typically the rural areas. And for our properties that are eligible and our borrowers that are eligible under the income guidelines there, we can offer USDA as low as 5.125. That final APR comes in at 5.802 with all of the fees included. So our borrowers typically shopping in those areas would be comparing USDA to FHA, and which you can see USDA offers a little bit better overall option typically in those scenarios if it is eligible. Now, where we love to shine here at the Mortgage Calculator, we offer a little bit outside the box scenarios. That's where our non-QM alt-doc options come in. So if our borrower doesn't qualify for conventional or FHA, perhaps they're self-employed and we need to use bank statements, 1099, P&L statements, etc. We can use alternative documentation here under this program. And you see here rates are nearly identical, 5.875 rate, a little bit higher on the final APR comes in at 6.145, but very comparable to conventional there. And I have some examples today as well. And we can use our non-QM alt-doc options for investment properties. For an investment property, rates come in today as low as 6% there. Final APR 6.321. And compare that to conventional for an investment property. Rates today come in same rate, 6%. Final APR touch cheaper there. Final APR 6.311. And our favorite options here at the Mortgage Calculator are DSCR options for investment properties. No income or employment needed. We simply use the rents from the rental property here to determine a DSCR or debt service coverage ratio. If the cover the expenses, that's a ratio over 1, which is what we use for all our examples. Our 3-year prepayment, which is pretty standard for these programs, comes in today at 5.999 rate. Final APR 6.258. And we can add a 5-year prepayment to sweeten the deal here at 5.875 rate. And that final APR comes in at 6.181. Both of those options actually beat conventional for investment property. That's because we're able to add that prepayment penalty in there as well. We can do it with no prepayment penalty for investors that don't want one, or some states do not allow it. The rates are very comparable still, 6% rate. Final APR 6.321, just a touch higher than conventional. And we have second mortgage options, HELOC options, commercial options, all kinds of options listed here on the page. But let's get into today's topic and compare 30-year versus 15-year options for some standard scenarios. So I pulled up a random listing here in my area. It looks like a townhome, just a standard single-family home, just kind of a narrow lot, it looks like, but a great option here where it would sneak in under all the loan limits we would need to compare different options here. So a standard home, $575,000 rough price here. So if our borrower wanted to purchase this home, we're going to compare conventional FHA and non-QM for 30 versus 15-year options. So first up, our conventional options. Our typical, going to request to put 5% down payment here. So that's what we use for our example for a primary home. And this allows us to compare the options. There is going to be PMI required on this, but the lowest rate option, 5.75 for a 2.5% discount point cost. And our par or zero option here, 6.49. And you'll see that's the 5% down option. And the PMI comes in at 141 when our borrower has an estimated score of 760. Now let's compare that to our 15-year option. So let me go back to the rates. Remember, we had as low as 5.75. See how we can buy it down when we go to 15 years. So when we do a 15-year option, we can get the rates a little bit lower, 4.999 or 4.99, sorry, at a cost of 2.5. So same cost there for a little bit lower rate. And the par rate option here, 5.99 for no cost. And still does require PMI. The PMI is going to be the same, but the payment's going to be a little higher at a 15-year amortization, but the same 5% down payment here. See the same PMI. Now, if our borrower needs to use an FHA option, we do have that option as well. So our borrower to use FHA typically asks for the lowest option for the standard program here, 3.5% down payment. So that's a little bit of an adjustment here in this scenario, but same everything else. So we can compare side by side. You can see the lowest rate option that we pulled up today, 5.375 rate at a cost of 1.853. But we do have some options with a little bit of lender credit. So we have an option at 6% rate to get 0.983 back towards closing costs. So a few different options here to pull up our standard FHA option. And remember, FHA does require that MI and that upfront MI as well. Now, let's compare our FHA option 30-year to the 15-year. So it changes up a little bit. So when we have the 15-year option, we can get the rates down to 4.875 at a cost of 2.288. And the option here, 4.875, affords us 0.22 back towards closing costs here. So definitely can get it down a little bit lower, but obviously the monthly payment is going to be a little bit higher, and the monthly payment with the mortgage insurance is going to be higher. So definitely some options to compare there. Now, again, at the Mortgage Calculator, we love to offer alternative scenarios. So here, let me pull up our non-QM option. So if our borrower needed to use alternative docs, this is one of the options. This is a full doc example because that will be comparable to FHA and conventional. If we just need to use non-QM for some reason here, we can go full doc QM, 10% down payment. There is no PMI required for non-QM, so a little bit different quote here you'll see. Obviously, the rates are typically a little bit higher for non-QM, especially if we're going the maximum of 90% LTV. But some interesting options here. There are some lender credits. So rates as low as 6.875 on our standard year for 2.25 discount points and costs. And we have an option here at 7.499 rate that affords 0.125 back in closing costs. And you see 10% down payment for that same scenario here, using that same 760 credit score. Now, if we want to compare the 15-year option here, we can see that we can get the rates a little bit lower, just as usual. So standard 10% down payment, the typical maximum request here on QM option. And let me expand these. You'll see our lowest rate option, we can get it down to 6.75 for 2.5 discount points. And the option here at 7.499 allows us 0.375 back towards closing costs. So here in non-QM, not that much of a difference. Definitely wouldn't recommend our borrower unless it's their prerogative to have lower amortization. But if they're looking to save on rate just by switching to a, it doesn't make that big of a difference here on non-QM. But we can see here with FHA, it does make a pretty big difference there. And also with our conventional options here, we can get it down quite a bit when we compare side by side. So definitely cool to compare those options. And it is a very common request from our borrowers out there. They're always wondering what will be the best option for their scenario. So hopefully that helps explain the difference between the rates. Overall, the 10-year treasury tracks all the rates in general overall, but every different loan program, the 15 years, the 30 years, you have to track different mortgage security indexes and everything. So it's great to pull up some specific examples there. So again, if anybody has any questions and needs a full loan estimate with the full fees for any of the options we showed today, please check out our website. We'll get you connected with one of our licensed loan officers, and they'd be happy to help out. So good luck, everybody, out there house hunting Friday. Thanks.